Hello everyone, welcome back to my channel. In my previous video, we discussed how to pass the necessary journal entries using traditional approach. In this video, we are going to discuss about the modern approach, also known as the American approach. In case of modern approach, we have 5 rules related to assets, liabilities, income, expense and capital. So let's discuss these rules one by one. The first tool that we are going to talk about is assets. Since assets have debit balance, any increase in asset will be debited, any decrease in asset will be credited. Opposite is in case of liability. Liabilities have credit balance, so any increase in the liability will be credited, any decrease in the liability will be debited. Capital rules are same as liability rules. Increase will be credited, decrease will be debited. Incomes have credit balance, so any increase in the income will be credited, any decrease in the income will be debited. Expenses have debit balance, so any increase in the expense will be debited and any decrease will be credited. Let's understand these rules with the help of an example. On January 1, Sham started business with cash 1 lakh rupees. First, you need to identify two accounts involved. First is cash, which is clear from the statement. Second, Sham started business with cash. So anything which is invested in business, it's called its capital. The next step is you need to classify these. Cash will come under assets and capital will come under capital only. The next thing you need to do is to apply the rules that we have just discussed. There is increase in the asset, so you will debit it. There is increase in capital, so you will credit it. So here is the entry. On Jan 1, in particulars column, I will write the accounts that needs to be debited and credited. Cash account in front of that debit. 2 in the next column. Sham's capital account, since name is given to us, so we will write Sham. Otherwise, you can write capital account only. In the debit column, I'll write the debit amount, and in the credit column, I will write the credit amount. Next, important narration. So business started with cash. Let's discuss one more example. On September 2, furniture worth 50,000 sold for cash. The step 1 is to identify two things involved. So two things involved are furniture and cash. Now you need to classify these under the 5 headings. Furniture will come under the assets and cash will also come under assets. The next step is to apply the rules. Since furniture is decreasing or the asset is decreasing, so we will credit it, and cash is increasing, that is asset is increasing, we'll debit it. So here is the entry. On September 2, cash account debited to furniture account. In the debit column, I'll write the debit amount, and in credit column, I will write the credit amount. In the narration, I'll write furniture sold for cash. Next very important topic that we are going to discuss is goods. First, what are goods? Goods are the things that a business purchases for the purpose of reselling it. So here are some situation. Let's see which account needs to be debited and credited in each case. When goods are purchased, so your goods are increasing. Instead of writing goods, I'll debit the purchases account and I'll credit, since you are giving cash in return, so you will credit cash or the name of the vendor if you are purchasing it on the credit basis. The second situation is when goods are sold. Here goods are decreasing, so you will credit. Instead of crediting goods, you will credit sales account and debit cash, since cash is coming, or the name of the customer if goods are sold on credit basis. The next situation is purchase return, which is opposite to purchases. Since purchases are debited, so purchase return will be credited. Purchase return can be due to defective quality, and you will debit either cash or vendor's name depending upon the situation. Sales return is opposite of sales. You debit sales return and you will credit either cash or the name of the customer. Sometimes the question is silent whether the goods are purchased or sold on cash or credit basis. So you need to remember these things. If the name of purchaser or seller is not given, so you will consider it to be as cash basis. If the name of purchaser or seller is given with cash, for example, goods purchased from Sonali for cash, since the word cash is mentioned, you will assume it that it is on cash basis. If the name of purchaser or seller is given but it is not mentioned whether it is on cash or credit basis, since name is given, so you will assume it as the credit basis. Let's discuss some of the important entries related to goods. So, the first entry is charity. Charity is something that you give in donation. So, it is an expense for the organization and expenses are increasing. So, we will debit the charity and your goods are decreasing. You will not credit sales. Why? Because you're not selling the goods. So, here we will take the purchases. So, here is the entry charity account debited to purchases account. You will write the amount in debit and credit column, and the most important thing, narration, you will write goods given as charity. The second important transaction or entry is free samples. It is an advertisement for the company. So your expenses are increasing, you will debit it. Here again, you're not selling the goods, so you will credit the purchases. Here is the entry advertisement account debited, since it is an expense for the organization, to purchases. You will write debit amount in debit column, credit amount in credit column, and narration is very important. Goods distributed as free samples. The next very important entry is when goods are withdrawn for personal use. Here, the withdrawn will be treated as drawings, and again your goods are decreasing, so you will consider it to be as purchases, not sales, because you're not selling any goods. So the necessary journal entry will be, first you will write the date, drawings account debited to purchases account. You will write the debit and credit amount. Narration is very important. Goods withdrawn for personal use. Sometimes the goods are lost due to fire or theft. Here it is a loss for the organization and loss is increasing, so you will debit the losses and you will credit the purchases as your goods are decreasing. Here is the entry loss of goods account debited to purchases account, not sales account, purchases account, as you are not selling the goods. Loss goods due to fire will be the narration. Sometimes the companies insure the goods, so you will claim the amount from the insurance company, and here is the entry insurance claim account debited to loss of goods account, and here will be the narration, that is claim filed or lodged. So the amounts that you are recovering can be fully recovered or partly recovered. In case it is fully recovered, the entry will be bank account debited to insurance claim. But if it is not fully recovered, the entry will be bank account debited, profit and loss account debited to insurance claim. So why we have debited profit and loss account is that the amount is not fully recovered. So the amount which is not recovered will go to profit and loss account. Every firm closes the books of accounts at the end of the year, so the closing balances are carried forward to the next year. In the new year, it is the first entry which is passed, that is why it is called the opening entry. In opening entry, you will debit all the assets, you will credit all the capital, and credit all the liabilities. If capital is not given to you, you can find out the capital by subtracting assets and liabilities. If your liability side is more than your asset side, then the difference will be treated as goodwill and the amount will be debited. Understand opening entry with the help of an example. Here, cash is the asset, so you will debit. Bank is also asset, you will debit. Stock is asset, you will debit. Furniture is asset, you will debit. Debtors are also assets, so you will debit. Creditors are liabilities, so you will credit the liabilities. Here is the necessary journal entry: cash account debited, bank account debited, stock account debited, furniture account debited, debtors account debited to creditors account, and the difference will be treated as capital because debit side is more than credit side, and the difference is 1,60,000. That's all for today. Now you can pass the necessary journal entries using any approach, whether traditional or your modern approach. If you like my video, hit the like button and press the bell icon to never miss any updates. Thank you.